All right, guys, I gave a lecture in the lunchtime Q&A today in the chat room about position size using an example from yesterday, and I think a lot of people were really responsive to it. So I thought I'd just make a quick video for the trading world or anyone that cares because it's so important. Position size and money management, way more important, in my opinion, if you want to be a day trader for a living. They're way more important than just knowing what a setup looks like or something like that, right? Okay, so real quick, I'll be short about this. LNG from yesterday. Now this is, we play reversals in the room. We play breakouts, we play everything. But this is an example looking for a reversal. LNG, these are 5-minute candles. And it was just grinding higher. And then got what you call fast to the upside. Or I call it shape change, okay? I guess I can do a quick. You can see if you just draw a line there. And then you draw another line. See how I didn't do that very well, but you see how the shape of the trajectory changes from this to almost straight up, okay? So when we see that, long or short, also we play shape to the downside as well. And then we're simply looking, come on, Mike. There it is. We're simply looking for a reversal. Now, generally, one of the things I default to, it's not always, it depends on how it's trading, but when you get this many 5-minute candles on it, while you're experiencing shape change to the upside, this is what looking for capitulation. You see the biggest volume here on this last 5-minute candle, and this 5-minute candle is wider in range than all the preceding ones, really than any one from the day. So that's what capitulation looks like, and that's when you look for a reversal. As a general rule, I will default to 2-minute candles to kind of get inside this 5-minute candle, is like an X-ray technique, if you will. Okay, so let's go to yesterday. And this is what it looked like on 2-minute candles. So I called it short below this little kind of red shooting star 2-minute candle. 33.94 with a high of day stop around 34.50, okay? So there it triggers and goes down a little bit and comes right back up. Okay, so the lesson here, if you just took, remember, if you're wanting to trade for a living, position size matters so much. So if you just took 200 shares here at 33.94, okay, so it moves in your favor a little bit. You're certainly not going to take any off the table for 200 shares, right? So you're just going to let it work or not work. So right here, as it starts to push up and you think, oh man, maybe it's going to go back through the high of the day, you're not panicking, right? If this moves up 50 cents from your entry, you're down $100 and you kill it, okay? If it takes out the high of the day, you lose about 100, roughly, okay? Now, let's go back to that same example, and let's just say you shorted 3,000 shares here. Okay, so now it pushes down a little bit and you think, oh yeah, I'm going to make a killing. I'm going to make about $3,000 when this gets down to 33. I'll cover $3,000 in 30 minutes. My neighbors are idiots for going to work every day, right? This is easy. So what happens? It pops back up and you start to think, what have I done? Maybe you kill it. Maybe you don't. Maybe you say, you know what? I'm going to honor the stop. And then it pushes down at one point, but right back up. And then the very next candle, at one point, now these are 2-minute candles, but at one point it's almost back up to the high of the day. You're in 3,000 shares short, and you're down about 40 cents, right? As this is pushing up, and you're thinking, if this pushes through the high of the day, it could move up another 50 cents in a blink. I mean, look at this move it made. So you're probably going to kill it up here because you're in too big. Now, keep in mind, everything's relative. If you're trading a $2 million account and your average stop loss on a trade is $1,000, you're willing to, but I'm talking about your average trader trying to grind it out with a $30,000 account trying to make a living, okay? And you went too big because you wanted the big one today, right? So what happens is you're in 3,000 shares, sorry about that, and all of a sudden you're down 30 cents and you're looking at probably another 80-cent move if this gets through the high of the day, or another 50-cent move. So you probably kill it on this push up. The high of this candle, 33.37. Let's just say about 40 cents because you shorted it at 95. 40 cents times 3,000 shares is $1,200 loss, right? So you lose 1,200, and the guy that took 200 shares isn't phased at all by this little move up. Okay, and let's just switch to fives now. And this was yesterday, so here. So if you took 200 shares, and then all of a sudden it just keeps falling, and you tell yourself, when this triggers on a 5-minute buy setup, that'll be my entry or my exit. That'll be where I buy to cover, which happened right here at 33.93 right there. So basically $1 a share, right? You shorted at 33.94, and you're covering at 32.93. So basically $1 a share, 200. So you made 200 bucks on this move. The guy that shorted in my scenario, the guy that shorted 3,000 shares, lost $1,200. So it's a $1,400 turnaround because you went bigger than you should have, right? Going for the big one, and you couldn't let it work. You couldn't let the stop work because you went in too big, okay? I see it happen all the time. So just think about that. A guy who traded, and both traders were right. The guy who traded 3,000 shares ends up losing, a little over 1,000. The guy who traded 200 shares makes a couple $100. That's a big turnaround, and you were both right. And not only that, but then you've got the mental anguish of being the idiot that was right about the trade and still lost, a little over $1,000. And then you're damaged mentally because then you say, well, next time I'm going to go big and I'll let it work or not, and next time it might stop out, and then you lose even more. So you can't trade bigger than you should, guys. If you want to feel like a professional trader, spend a whole week trading 100 shares. Then you'll never feel the need to scalp, right? And you'll never panic out of a trade. You can just let the trade work. All right, I'm done babbling.